Thank you for joining me on Project Tech Accounting YouTube channel. Today we're going to deal with sample business transactions for a fictitious company, Logic Integrated Partners, and their general journal entries for the month of September 2024. This is actually going to be a practical video, and at the end of this video, you're going to understand double entry accounting. You also understand how to interpret a business transaction and be able to identify the accounts that have been affected and also how to put them in journals. So it's going to be a whole lot of information in this video because before you can actually use any accounting software, you should be able to know how to identify a business transaction, interpret it and be able to identify the account that are being affected, whether the account is being credited or being debited. So that's a very important concept in software usage. So let's get into this software. Let's get into this video and look at the business transaction. Here, this Logic Integrated Partners, where we're going to look at their business transactions for the month of September and see how we can put all the transactions in the journal. The essence of this is to understand each of these transactions and be able to interpret them and know the accounts that have been affected, the one that have been debited, and the one that have been credited. So, and we also understand how to do a journal. So that's going to be a whole lot of information. So I want to encourage you to go ahead, watch this video because you are going to, really have a lot of information. So September 1st, Mr. Samuel Oringa decided to start up a new accounting firm. The company is called Logic Integrated Partners by investing 250,000 naira and computer equipment with a fair value of 30,000. September 1st, Logic Integrated Partners rented an office space with a down payment of 15,000 naira for the first 3 months. September 2nd, Logic Integrated Partners purchased 15,000 naira worth of office equipment and 8,000 naira worth of office supply on credit. September 2nd, Logic Integrated Partners purchased 1 year insurance policy by paying 12,000 naira. September 14, Logic Integrated Partners paid wages of 12,500 to a painter who helped them to paint the office. So we have about 10 transactions here. We have about 10 sample transactions in the month of September. So we're going to look at these transactions critically and be able to extract the necessary information that will enable us to do the posting in the subsequent videos. So looking at this, we start by the number one. September 1st, Logic Integrated Partners decided to start a accounting business by investing 250 and computer equipment with a fair value of this. So now look at this number one. The owner invested 250,000 naira and also invested another computer equipment with a fair value of 30,000 naira. So in this case, the investment of 250,000 naira is in cash. So money was deposited into the company's cash account, let's assume. So we're going to create an account called cash and we're going to debit 250,000 naira into that account. Let's assume the company opened maybe a bank account in any of the bank and deposited this 250,000 naira cash into it. So um, because the company received the money was deposited into this account, that means it's going to be a debit account. So a debit transaction. So we're going to call this in cash. Then he also invested computer equipment with a fair value of 30,000 naira. So he also computer equipment. We are going to create another account called computer equipment and being created, we debited 30,000 naira. So the company now have a total of the company now have a total capital of 280,000. So we add up the 250 plus 30 and credit the capital account. So we are going to create a capital account, which is the total capital of the company, and we credit 250,000 naira. So this is the interpretation for the first transaction. So let's move to the second transaction. We have September 1st, Logic Integrated Partners rented an office space with a down payment of 15,000 naira. Now the company is going to collect 15,000 naira from the cash account, from that 250,000 naira cash that was invested in the company. So they now have money to rent office space. So they will take the money, they will take the 15,000 naira from the cash account and now pay rent. So we are going to the two accounts that are being affected here is the cash and the rent. As you can see, prepaid rent and cash. And because we are removing money, we are now taking money out from our cash account. So we're going to credit their cash account because money is going out from the cash account. So we're now going to debit the rent account and credit the cash account. So remember that this money is being taken from the credit account and being given to the rent account. So remember our this thing that you credit the giver and debit the receiver. So this money went from cash account to the rent account. So we credit the cash account and debit the rent account. So that's number two. Number three, we have September 2nd, Logic Integrated Partners purchased 15,000 naira worth of office equipment and 8,000 naira of office supply, all on credit. So they made another purchase. So this is also going to be um, the office equipment. These are the accounts that are involved. I told you in our previous video that every business transaction becomes the account in the chart of account. So office equipment becomes an account. We create account for office equipment and office supply, 15,000 and 8,000. And this this transaction is a that is a transaction you have to pay later because it was given on credit. So because it's on credit, we are not going to pay cash right now. So we cannot debit the cash account because you did not pay. But instead, we are now going to debit the account payable because it's a liability account because you are going to pay the money later. So we credit the cash payment, which is 23,000 naira. We are going to credit the account payable account, which is 23,000 naira. If this transaction was not on credit, if this transaction was not on credit, we would have credited our cash account just like the previous transaction. But here, since we didn't pay cash, we have to credit the account payable account. So number four, September 2nd, Logic Integrated Partners purchased 1 year insurance policy by paying 12,000 naira. So this is also purchased. In this case, they also collected the money from the cash account. Now we're going to create account for the insurance policy. So we are created account for prepaid insurance, and the money was taken from the cash account. So we credit the cash because money was taken from the cash account, and we debit the prepaid insurance. So this is a purchase transaction. So most of the time in a purchase transaction, you credit where the money was taken from to do the purchase. Number five, September 14, Logic Integrated Partners paid wages of 12,500 to a painter who helped them paint the office. So this is also a, a transaction where they have to also remove 12,000 naira from our cash account and pay wages. So we have wages expenses account. You create this, and also we already have our cash account. So money was taken from the cash account. So you credit the cash account and debit the wages expenses because you paid wages to someone who assisted you to paint your office. So in number six, September 18th, a client paid Logic Integrated Partners 32,000 for a job completed. So in this number six, you see that is the other way around because a customer is now paying Logic Integrated Partners. So in that case, we have the two accounts that have been affected in number six is the cash account and also the account the accounting revenue, the revenue account, because the company has made has completed a job and a client paid them money. So the money will go into their cash account, but at the same time, the company's revenue, which is an equity account, this accounting revenue is an equity account. If you watch my previous video, you understand what I mean by the equity account. So in this case, this account is an equity account which increases anytime a company makes money. So as the money enters into the company's account, which is the cash account, is being debited because money entered into the account. Debits. So anytime money enters into your company's account, that account is debited. So 32,000 is debited in the cash account, and at the same time, the company revenue account is also being credited because it increases. Then number seven, September 19th, a client was billed 12,000 naira for job completed. So this time they completed the job and they sent a bill, which is an invoice was sent indicating that the job has been completed, but money has not been paid. But because we are using accrual accounting, so we're going to post the transaction pending when the money will be paid. So here we have 12,000 naira billed. So because it's a bill, money has not been paid, and at the same time, our revenue has increased. So this we are not going to credit, we are going to debit our account receivable because this money has not been received. So we cannot debit our cash account because the cash has not come in, but we have actually delivered value. So this time we debit our account receivable and at the same time credit our account revenue, which is also indicating that the company's equity has increased. So in the number eight, September 30th, Logic Integrated Partners paid for purchases made on September 2nd. So the September 2nd transaction is the one we have 23,000 naira, which is office equipment and office supply on credit. Right? Am I correct? September 2nd. Okay, yeah, look at it. Office supply and office. supply and office equipment on credit. So we are going to look at this number 8. We see that now that we are ready to pay for that money, we are not going to credit our cash account 23,000 to offset the account uh, the account payable that has been pending 23,000. We have to offset it. So we pay the money, we collect the money from our account and the cash account to now offset the account payable. So that's what happened in that number 8. So in number 9, September 30th, Logic Integrated Partners was paid by the customer of September 19th. So September 19th here is number 7. So a client was billed. So that client was billed 12,000 naira. So this time around, the client has paid. So the 12,000 naira goes into our cash account. So we debit 12,000 naira because it's a is money that has been received from a customer, and we now offset the account receivable of 12,000 naira. So in the last transaction, number 10, September 2nd, the owner of Logic Integrated Partners withdrew 5,000 naira to pay for personal expenses. So this is a personal expenses by the owner of Logic Integrated Partner. So um, the accounts that are being affected are the cash account and the um, drawings. You can call it owner's withdrawal, or you can call it drawings. So 5,000 naira will be credited to our cash account and debited to the owner's withdrawal account. So in my next video, I'm going to talk about setting up the chart of account in Sage 50. So we're going to lay our hand on the software and see how the interface of the software and how to go about setting up the chart of account. So ensure you watch that video and also kindly like, share, and subscribe to our YouTube channel so that you can always get a notification anytime we release the next video. Thank you.